Hello, everybody. Um, Let me go. Hold on. Hello. Okay. So it looks like I'm live right now. Okay. So let's go. Let's get started. Not gonna be here for too long, unless I start to see a lot of people commenting, and we'll go through all that too. But so let's get to the show. I'm not gonna play any music today. I'm trying to. Hi, Gabriel. What's up? Hey. how how are we doing today? So today I'm just going to kind of get straight to the point, and we're gonna take a look at this company right here, and the comparisons, why people are pumping that one, right? Okay, so before that though, let's take a look at Bitcoin, or the crypto space in general. Now, I just watched Gary Gensler interview or whatever about how this is a wild west and all that stuff. We need to regulate. It's kind of forgive me for saying dumb to say that. Oh, you're from Miami? That's cool. Is it raining over there? Gamestop is amazing. S&P 500 is getting closer and every day. Yep. I really think that, but don't you have to have like another, like, not only you have to be profitable for 3/4 in a row, you have to be at a certain market cap, right? So there's qualification that we have to get through, but I'm sure we're gonna be able to get profitable 3/4 in a row for the fiscal year. It's almost never rain there. Are you kidding me? No, that's not true. Although I've never been to Miami, so I wouldn't know. But I will take your word for it. All right, guys. So Bitcoin went up a little bit today. The whole crypto markets kind of go berserk right now because of the low interest rate. Well, the Fed never said that, but he did allude to cuts. So that's why the market is kind of enthusiastic about this. The first time 3 years ago when that happened, when the Federal Reserve was saying, hey, we're going to cut rate, what happened? These type of thing happens because it's commodity, right? If the rate is low, that means the dollar is going to go down in value. Inflation's going up, but the value of your dollars is going to go down in value. So commodity such as Bitcoin and any crypto that has no inflationary prospects is going to go up as well. I don't know. I'm not sold here, but Sol has been running like crazy. Congratulations if you're in that particular coin. I just feel like there's something afoot here, Again, hey, I'm not even following what Sol is actually. I just have a feeling it's not really stellar, to say the least. I'll just leave it at that. Of course, Binance kind of bounced back. I think there's some litigation that's happening to Binance right now. I think the CEO was charged with something, right? But he was settling. So I don't know the future of this coin, how it's going to be. But actually like the future of crypto, the industry in general is under attack right now. And I feel like it's so frustrating to kind of like speculate on this market. Of course, I still have XRP, like cryptocurrency on the blockchain. So hey, I'm in here for the long term. And so, whatever happened to the crypto industry, it is what it is. But I think it's here to stay. Yes, the regulator is going to have to figure that out for the industry to grow. But until then, until we figure out what the law is, we can't even, participate in this, right? Of course, the big guys, they're going to be able to accumulate more because, again, they know all the rules, they know where to push and shove and whatever. It's just frustrating for retail to, to be right and get robbed. I feel like get robbed in this sense of crypto becoming a legit, asset, so to speak. Well, I mean, it could be a tactic too for people to kind of like, figuratively, they're shaking the tree, right? So to see how many people would be weak enough to sell it out of the asset class, right? And so when people are panicking, selling, what do? They usually scoop it up on the back end, and then later on they're gonna pump it to you, kind of like that. So that's the only way that they could make money, right? Because if they make money honestly, they can't, because they would have to go to work like you and I. So the only other way to do that is to mislead you into going into something, and then kind of take your equity that way to allocate to something else. At $46, you'll be eligible for it. Okay, for GameStop to be right. $46. So where is that? So it's around here. $46. So that's the line right there. According to Gabriel, we will be eligible for S&P 500. Okay, we have a way to go yet. So if you were to measure that, it's about 2x from here. Okay. 2x, I think that's doable, even fundamentally, right? Can we technically increase the revenue 2x from where we are right now? I think we can within a couple of years, right? Anyway, so that's me speculating. Okay, so let's go to the price action. Currently we're trading at 16.96. Was kind of interesting trading day, to say the least. You see a lot of like momentum dying, so to speak. But if you were to look at this kind of level right here, it's kind of bounced off of this recent high right there. So is it gonna act as a support? It seems like it, right? Not to say that it might not come down ever, because it has happened many times where it doesn't trade like a normal stock at all. If you look at the volume, I bet it's really low. Yep. Back to 4 million shares being traded back and forth again. So again, volume is kind of dying down again. It went up for a while. So until we see consistent volume coming in, they could still manipulating it down. I mean, the price again, as low as it can go, and as high as it can go. I don't know. To be or not to be. I'm babbling. I'm sorry. Not clear on what I'm trying to say here. If you threw a Fibonacci, let's throw a Fibonacci ruler over here. Okay. If you look at the body of the candle, maybe right here. No, that doesn't make any sense. Let's measure from the high, from the low over here to the high over here. If it's gonna follow this, guess what we're gonna see? Boom. 21. That's my prediction right there. I don't know how long it's gonna hit 21, but there you go. You hear it first. You hear it first. No, I'm just playing around. Again, price action is not, really important here. The reason why I show it is because like people just like to see the price action and say, oh, how high is it going to go? Oh, how high is it now? Look, it's down from, in a year, it's down 20%, or in a year, it's down 40%, right? Of course, it's what they want you to focus on is the price action from day to day, what happened. But, of course, we know what's most important, right? And that is balance sheets. All right, so let's get started. So this particular live stream, I'm just going to kind of compare what Clover Health investment is and to GameStop, right? Of course. But it's very curious to me that there are a lot of YouTubers out there who pump a certain stock, right? Now, this particular gentleman here have been covering Clover for a long while. And I follow him, from time to time, because I did have some investment in that in the earlier state. I don't have it anymore, but I used to. The whole, GME run and then the other stuff run after it too. So, from what I kind of remember, Clover was pushed out to the public and saying that, this is the highly shorted stock as well, blah, 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 right? And we all know what the history of that is. But every now and again, you see these type of video being pushed and, saying that, it's going to be the, healthcare industry. Now, let me start back up a little bit here. I'm realizing that these two companies are different in industry, so it's very unfair for me to kind of compare the two because again, like the industry is so different. But I think it's worth noted that most of this company that is being pushed is not profitable yet, right? And they always see, this video here. Sorry, that's Bella. This video here kind of give me an idea of like why would they're trying to push this, and what are they saying in this time period, right? Like, it's on its path to profitability. And I remember, GameStop was kind of like that 3 years ago, right? But now we're at a point where we're going to be profitable already. But yet they're still pushing the stock like this out to the public, saying, it's on its path, you see. And it's cheaper than GameStop. Look, it's only under $1, right? Stuff like that, right? And of course, like when people are investing this or just join in, they don't necessarily know what the price is, whether the price is actually, they don't actually realize that, just because it's $1 and it's cheaper than GameStop right now per share, they don't realize, the other important facts as well, like how many shares are outstanding into this company. And so they don't really look into it, as deep as we want them to, right? And this is how people fall into investing in this type of company. I fall into it too before I learn how to read the balance sheets. And so that's why I want to take some time here, just in case somebody, here watch this channel, kind of like, oh, I don't know what this is, right? It's, oh, sorry, 1 second. Sorry, my dog, Bella, is like stirring about. Okay, so this is Clover Health. Just in case you don't know what that is, this is a healthcare industry. Apparently, they are working with software, payments, and hardwares, and all that stuff. It's kind of a tech company, right? But based on healthcare. It seems like they have this, what is this? This Flex thing that is coming out. Forgive me, I don't know about the company all that well. But just from the balance sheet, it's kind of scary a little bit, right, for me. But I mean, in the healthcare industry, obviously, if you have a recession kind of looming over, usually these type of company would do well. But again, like low interest, it's going to be something that might, cause this stock to go up. But don't be mistaken the price from the fundamental of the company. So that's what I'm trying to separate the two. You might be able to play this and then, it runs 20%, 30%, and then just straight back down again. Who knows, right? But I think this company has been kind of pegged into what GameStop was as well. Kind of try to take some volume away from GameStop at the time, when GameStop ran. They could technically do it again, right? And because this stock is so... What is the float for this stock? Okay, so currently it's at $487 million right now. 487 million shares outstanding right now. So it's more than GameStop. So it's the fact that it's like $1, they could technically do stuff like this. The price target's like twice as much right now, based on this analyst, right? Now we know that the analysts out there, but anyway, before we go into that, if you look at the revenue right here and the market cap, sure, it's kind of discrepant. There's a price to earnings right there, or price to sale, is enticing, to say the least, because they make a $2 billion sale, but the market cap is less than that. Sure, you could evaluate that, but look at this. The net income is $227 million, right? So they still lose money in that sense. But the price target is twice as much as it is now. Perhaps it's been kind of pummeled. Oh, okay. So it's kind of staying flat for this whole year. If you look at the 5 years, this is when GameStop run, right? Look at this. GameStop runs right here, and therefore they pump every other stock out there as well. And it was at 16 at one point. Now it's at $1. So that's just an example of what they could do again. I'm not saying again this company is not valued it correctly either. I think it has more, demonstration to go to increase the path of profitability. Currently, they have too much expense, I think. Okay, so let's look at their stat real quick here. So the enterprise value is in the negative. Usually that's kind of a bad idea, right? Not even an asset yet, but let's look into it more deeply than that. The float, I guess inside ownership is higher than AMC, so that's a good point, right? Institutionally owned, less than that. Less than Gamestop even, so 24%. There's a reason for that though, I feel like, right? So if you look at the gross income, but as far as, so operating income alone, it's kind of negative already right there. So they spend a lot of money, that's why. Okay, so that's in the negative $200 million plus. If you look at the quick ratio, debt to equity, not too bad. That's hardly any debt. So why are they spending so much money? Yeah, we need to look into that. As far as gross profit margin, it's 9% right there. And then profit margin is negative 9%. So it's very low. It's a really low profit margin, a gross profit margin even, than GameStop. So why are people, like, especially the analysts out there, okay, they want you to hold this company, you see? And then look at this, 95% price different. So they want you to hold this company, this analyst, right? And they think that the price target should be at $1.92 right there. Okay, so that's the forecast. And of course, so we're trading at a lower price too. So there's 3 analysts out there. See how many of them are people that we know. Citigroup, who the heck are these people? I don't know. Strong buy. Credit Suisse sell. Okay. All right. So who is this analyst right here? Let's look it up together. Leadership group. I hate it when they like, let's accept the cookies. Capital. Women entrepreneur, well management. Yeah, I need to do some research on that. I just don't want to do that right now. But yeah, I mean, these people want you to buy into it. Let's analyze it together here. So, okay, so if you look at the annual, let's do the trailing 12 right here. 2.4 million in revenue. Operating income right here. It might be some, what is this? Operating income is the amount of profit a company has after paying all of the expenses related to its operation, core operation. So the expenses is right here, while the gross profit. So they spend way too much money on whatever. Can include SG&A, R&D, that's research and development, and other expenses. So currently, they earn less than what they make. They expense. Yeah. So that's why you have that $250 million right there. Cash flow negative, obviously. Look at that. Cash flow, it's not even a good cash flow right there. Yeah, I don't know. Again, like if it's a fintech company or whatever, sure, you could push that angle. But if the balance sheet doesn't really support that, I don't get how people could, push this company in a straight face, right? Over GameStop, obviously. So it seems like they have the goodwill value there. See, liability has more liability than actual assets. Oh, sorry. My apology. Sorry, I was looking at the wrong one. So they do have some assets that are covering the liability, and the leftover is $300 million right there. Okay, at least they have some book value here. If you look at the book value versus the price, that's actually pretty good. But I just don't like how they are making more money. Oh, I'm sorry, making less money than they would need to survive, right? And currently, look at the cash on hands right here, $500 million. So $517 million. If they spend a year, if you look at the expenses, income or expenses, operating expenses right here, they would have a year worth of money on hand before they have to go to the shareholder to dilute them more, right? So that's concerning. But they're not going to go bankrupt anytime soon, right? That's the plus. However, look at the retaining earnings. Right now it's 2.08. That's $2 billion. Okay. What does the returning earnings for GameStop? It's 270. I think 79. So in comparison, there's no comparing to GameStop. Hands down, GameStop should be pushed to the public, not this one, right? Well, if you have any integrity whatsoever. But again, these are two different industry. I get it. It's really tough to compare the two. So, and then yeah, I mean, what else should I be showing you? It has nothing good here, so to speak. I would wait to invest in this one. I wouldn't jump into this one right at this moment. At the very least, hope that they will clean up this mess right here, right? Net income. But okay, revenues kind of grow and kind of exponentially way. Okay, I hope that it's even more, so that the earnings will catch up to the revenue. I mean, sometimes they could expand way too quickly too. That's why they have to have a lot of expenses. But I don't know, like, why companies does this to the point where if they expand way too quickly, they wouldn't have a chance to even grow, Maybe the equipment that they use for this company is a lot higher in value. So they have to spend more upfront in order to make money on the back end. But I don't know. I mean, if you look at they take payments and stuff like that. Okay, so it could be like the gadget that they support. I don't know who partner up with them as far as like the point of sale here. So okay. I mean, it could be seen as a high-tech company, but in comparison to GameStop, it's like hands down, look at this. As far as the path to profitability thing, it's a lot closer for GameStop for people to start talking about GameStop. But of course, they're not going to talk about it. Even the analysts out there, they're not even changing their tune yet, right? Nobody is willing to give a shot to this company. And so we all know why, though. We all know why. I don't have to tell you all of that. All right, guys. This live stream is pretty boring, so I apologize, but I have to get this out because, again, there might be people who kind of take a look at this company and this company here and say, oh, this is the cheapest one. This is cheaper than GameStop. Go ahead and buy into it, I don't know. I wouldn't buy into it, honestly. But if you want to play the price action and kind of catch the wave, if you want to do that, that's on you. I'm hoping that you would do your own research first before you do that. But yeah, as far as GameStop go, though, it's a very promising company to invest in. Yeah, that's all I have. Yeah, I'm gonna sign up. Thank you guys for sitting through this. I appreciate all of you.